Did you know that selling a stock, buying property, or even giving a gift could trigger a tax bill? Can I deduct property tax on my tax return? Yes, property taxes on your home may be deductible, but there is a limit. How it works: you can deduct up to $10,000, $5,000 if married filing separate in state and local taxes, which includes property tax. If you itemize deductions instead of taking the standard deduction, you can claim property tax. What is the capital gain tax and how does it work? If you sell an asset like stocks, real estate, or cryptocurrency for a profit, you may owe capital gain tax. Key facts: short-term capital gains held less than 1 year are taxed as ordinary income. Long-term capital gains held more than 1 year are taxed at 0%, 15%, or 20%. How do I report stock market gains or losses on my tax? If you sold stocks, ETFs, or mutual funds, you must report it on Schedule D, Capital Gain and Losses, and Form 8949. Do I have to pay sales tax online purchases? Yes, in most states, online sales tax laws changed in 2018 after a Supreme Court ruling. How it works: if you buy from a large online retailer like Amazon, Walmart, etc., they usually collect sales tax at checkout. If you buy from a small out-of-state business, you might need to report and pay use tax on your state return. How does IRS tax cryptocurrency transactions? IRS treats crypto like stocks, meaning selling crypto for a profit, taxable capital gain. Trading one crypto for another, taxable event. Buying something with crypto, the IRS sees this as a spending and asset, and you may owe tax. What is the inheritance tax and who has to pay? Good news: most Americans don't pay inheritance tax, but there is a catch: federal estate tax. If the estate is worth over $13.61 million as of 2024 limit, the estate itself may owe taxes before distributing assets. Heirs don't pay federal tax on what they inherit. State inheritance taxes. Some states like Iowa, Kentucky, Maryland, Nebraska, New Jersey, and Pennsylvania charge an inheritance tax, meaning heirs must be a percentage of what they receive. How does the gift tax work? The IRS allows tax-free gift, but only up to a certain amount. Key rules: in 2024, you can give up to $18,000 per person per year without reporting it. If you exceed this limit, you must file Form 709 gift tax return, but you likely won't owe tax unless your lifetime gifts exceeds $13.61 million. What to do next? Keep records of stocks, crypto, and real estate transactions. Check your state sales tax law for online purchase. Consult a tax professional if you receive a large inheritance or gift. What's your biggest tax concern? Property tax, capital gain, or crypto? Drop a comment below. You like and subscribe for more tax insight. Assalamu alaikum.